The structure of health insurance. The structure of health insurance. So, as you guys, many of you that watch my videos may know, um, or if you have read my work as a publisher or writer, I like to talk about systems. I like to explore systems. I like to dissect systems. And um, happens to be that I am a licensed health insurance agent um, in multiple states. I I'm not only licensed, but I'm connected to a network of individuals who are licensed in multiple states as well. So, we'll get to the health insurance, if you need assistance towards the end of the video. But the purpose of this video is to explain the structure of health insurance, to dissect it. Not many people understand what's going on. Some do, yes, but not many. I was one of those people at one time. You just have health insurance and you just, all right, just take care of my expenses. You don't really think about, God forbid, if something major happens, if does this health insurance coverage cover it? What are my benefits? What are my coverage options? What are my options on the marketplace? What is ACA? What is the private marketplace, etc.? All the stuff. And um, I'm not going to give you everything today. Over the course of weeks, I think I'm going to dedicate the Sundays. I'll talk about health insurance issues. But today, in this video, I want to focus on the the four core key components of health insurance. The four key components of health insurance. So we're breaking down the health insurance structure of health insurance, and there's four key components. Now, to before we dig deep into the four key components, health insurance does not guarantee that whatever you're going through, however your health care, it does not guarantee that it's solved. It, depending on the agreement, it ensures that you have coverage, that you you could offset delegate the risk to the insurance company. That's what insurance is transferring the risk. You know, any kind of insurance. If uh you get in a car accident, you're transferring the risk that you have to pay. You're going to be financially liable. However it happens, whatever happens, there's multiple things going to happen. You could be at fault. They could be at fault. There could be like injuries, medical expenses. Insurance transfers that risk. That is all on you, and it's on mostly on the insurance company, or dependent generally mostly on the insurance company. That's with health insurance, renter's insurance, life insurance, car insurance. Is just transferring the risk. It's the same thing in health insurance. Health insurance, you're trans you're transferring the risk that something health wise happens to you. You need checked out. You're transferring it to the company, the health insurance company. Um, so it's it's one of the most important financial moves you can make. It's different in different countries, states, etc. But in the United States, I'm talking about. It's where I'm licensed in the United States. It's one of the best financial moves you can make because doctors, medical visits, health insurance visits, they're expensive. They're generally very expensive, and it's wiser to have insurance Just, have that peace of mind in case something goes wrong, or just simply, going to get a physical, et cetera, which we're going to talk about all that stuff. We're going to dig deep into it, but it's better to have the coverage than not have no coverage. Then something happens to you and you're looking at thousands, tens of thousands, hundreds of thousands, millions if you're not careful. So that's why this episode is very important, especially for you men. For you men. It's important for women too, but it's important for men to understand how important health insurance is, how important to have coverage, and how important it is to understand the coverage, and how important it is to understand the key components. So, first, well, the four key components, and I'm going to go into each of them. The four key components of health insurance is one, the premium, two, the deductible, three, coinsurance, and four, max out of pocket MOOP. Max out of pocket MOOP. So it's one, the premium, two, the deductible, three, the coinsurance, and the four, the max out of pocket MOOP. So beginning with the premium. The premium is the payment that you make to have access to the coverage. So this is the cost, the what you pay generally every month for you to have access to whatever the coverage states or stipulates. You pay this every month. Um, Now, it's important to know the premium does not equal the total cost of whatever your health insurance is going to cover. It does not equal it, but it gives you access to the coverage. What I say about insurance, insurance is transferring risk. So the premium is the payment that you make generally every month to transfer the risk from yourself to the insurance company. Uh, and, you know, a lot of times, even when you look at like car payments, for example, a lot of the times people, I want low car payments. I want low car payments, this and that, blah, blah, blah. But they don't think about the back end. Something goes wrong, a warranty, does this car have high miles, etc. I might be paying low payments, but I don't have a good quality car. It's similar to health insurance. You might be paying low uh payments. You might be paying low payments. Everybody wants low payments, but on the back end, if something happens, there's deductibles, there's co-insurance, there's a max out of pocket MOOP. And out of those three, which I'm going to talk about all three, the MOOP is probably the most important, the max out of pocket. Um, but we're gonna go through all of them. It's just that uh, generally the lower the premium. This is not guaranteed, but generally the lower the premium, the higher the max out of pocket. And the higher the premium, the lower generally, not always, higher the premium, the lower the max out of pocket. And we're gonna go over the max out of pocket, but we're just focused on the deductible right now. The deductible is the cost that you pay generally every month to have access to the coverage. Okay, so now we got that out of the way. Next is the deductible. The deductible is the cost. So put aside the premium. The premium, this is separate from the premium. The premium is just the cost that you pay to have access to the coverage. The premium is that's what the premium is. The deductible is what you pay when you go to the healthcare provider. Is what you pay the cost of entry to the cost to actually when you go to the provider to use the service to get, the healthcare coverage, whatever you need. And this is what you pay before the insurance meaningfully participates. Um, so deductibles, they were set each year. Uh, High deductibles is generally bad, but it's a good risk decision. And deductibles are what kind of like it's a mechanism in place. Some people might be wondering, why do insurance companies, why can't I just pay this month amount and go and use my health insurance and not have to worry about the deductible? Well, deductible, make sure that people don't overuse their health insurance, because the health insurance companies are taking a gamble, which kind of pays off because you're not expecting everybody to use their medical insurance all at once. You're not expecting, all this medical stuff to go on, everybody to get sick all at once. So, but it's a good business play if you could get multiple people a month paying a premium. And then, okay, this person gets sick, you pay them. That person gets sick, but not everybody's going to get sick at the same time, but you're still collecting the premium. So they're taking a gamble, but it's a beneficial gamble. But now the deductible is what you pay to the healthcare provider to get entry, and deductibles reset every year. Um, and also very important. So as I said, deductibles are what you pay to the healthcare providers. However, uh, preventable care is often exempt. Like when you go to a physical once or twice a year, you don't have to pay nothing for that except the well you might have to like do a small deductible, a copay, uh but as far as the deductible, you don't have to, because some, like if you get a broken arm, for example, and the deductible is uh your deductible is $9,000, and your your broken bill, your arm bill for your broken arm is $11,000. You have to pay $9,000 for before the insurance company to step in. That's the deductible. You have to pay that before the insurance company steps in. Now, so 9,000 minus 11,000 is 2,000. So now we get into coinsurance. Coinsurance is the shared burden. So let's say again, you broke your arm. Your deductible is $9,000. That's what you have to pay to get it covered. But um, this the bill is $11,000, so there's $2,000 left over that is shared between you and uh the insurance company. So let's now the co-insurance is the shared benefit. So let's say shared burden. So let's say the co-insurance is 2080. You have to pay 20% of the remainder of what the deductible what's outside of the deductible, the co-insurance, and you have to pay the insurance company pays the other 80%. So, like what you're paying like what, $400, and the insurance company is paying $1,600. That's the co-insurance. I hope I didn't get the math wrong. Just did it off the top of my head, but Yeah, so it's 20%. Co-insurance, let's say that it's just different. Sometimes the co-insurance is 50/50, might be 40/60. I'm just using 20/80 for this example. But 20/80, $2,000 left over after you pay the $9,000 deductible and for $11,000 bill, the you're paying for the 400 remaining, and the insurance company is paying the 1,600. So for that broken arm in total, with your insurance policy, based off of the $9,000 deductible and the 20/80 co-insurance for $11,000 bill in total, you're paying $9,400 for that. That's what the co-insurance is for, to split the burden after the deductible. Um, so like co-insurance, they apply to large bills. This is often where people get blindsided, but this is why it's good to have a licensed health insurance agent in your network. And I'll leave you my information at the end. Like, have a licensed health insurance agent in your network to go through all these information or this information and uh, help you understand what you don't understand. Uh, and co-insurance is generally where people realize they misunderstood their health insurance policy. This is co-insurance is very, very, very important. Now, probably perhaps the most important is the max out of pocket. This is the real safety net, and this is where a lot of people pay. And this is where you have to understand the risk that you're willing to take. And there are solutions, even if you have a high max out of pocket, there are, solutions around it, plans that you could get to cover that uh, high max out of pocket. So let's say now, right, with the $9,000, um, let's say with the $9,000 deductible that you paid for the $11,000 bill for the broken arm you have, um, and the 11,000 $9,000 deductible, 11,000 bill for the broken arm, and $2,000 left over, right? But now let's change it. The the insurance company, they gave you a $9,000 deductible and a $9,000 max out of pocket in the same sentence. I mean, in the same policy. So that means the deductible and the max out of pocket offset for the broken arm. So you have to pay what you have to pay. All you have to pay is the $9,000. After you pay the $9,000, the $2,000 remaining, uh, the insurance company covers it, or they might have. Well, no, the insurance company covers it, so you only pay the $9,000. That's the max. You're only allowed to pay $9,000 in the plan year. That's the max out of pocket. Now let's say the same arm broken, your deductible, you have a higher premium. Your deductible is, let's say, $5,000, and your max out of pocket is $9,000, and your co-insurance is 20% you, 20/80, 20% you, 80% the company. So that means for that broken arm, where the bill is $11,000, you're paying the $4,000. You're paying the $4,000. That's the deductible, and then um, the $9,000 is the max out of pocket. So you have to, from the 4,000 to the 9,000, you have to share 80/20 with the insurance company. So you pay 20% of the 5,000, and they pay 80% of the 5,000 difference to get to the 9,000 max out of pocket. Then the remaining 2,000 from the 9,000 to 11,000, their insurance company covers that whole because you covered your max out of pocket. You covered your max out of pocket. And I know this is very important. I know it can get a little boring and like I don't care about this stuff, but it's very, very, very important because you know some carriers have high max out of pockets. Some probably don't have any. And you could be, let's say the you have a 25,000 max out of pocket. You have a low deductible, but you have a $25,000 max out of pocket, or or a $30,000 max out of pocket. Let's say you got in a fight. You got in a fight. You caused the fight. Let's say you got in a fight and you got multiple broken arms. You got fractured, no broken nose, whatever. You got to get some eye work done. It costs tens of thousands. It costs tens of thousands. Um, the max out of pocket, the max that you would pay is the 25 or the 30,000, whatever your max out of pocket is. That's that's what you would pay. And of course, like there could be, let's say the company has a $10,000 deductible on that plan. So you have to pay $10,000 to even the insurance to kick in. And then let's say it's 2080 coinsurance. So you pay the 20% remaining from the 30,000 and the company pays the remaining 80% to the 30,000. So that's how, but so there are plans, which we'll talk about in future videos because I don't want to give you too much, but there are plans to kind of take away the risk out of the max out of pocket. There are ways you could mitigate the risk, completely and just like, just uh, only pay for what you need, really. That all determines like many factors: your age, your tolerance for risk, your your needs, whatever it is, what your health, your current health, a lot of things. So that's just this. We could go on for days, hours, talking about the ins and out of health insurance. But I just wanted to keep this, relatively short. Just understand when you're thinking about health insurance coverage, these are the four key things you should pay attention to: the premium, the deductible, uh, the co-insurance, and the max out of pocket. The premium is what you pay to use it. The deductible is what you pay to the healthcare provider, uh, to outside of preventive care that's generally offered on health insurance, physicals every year, a couple of dental visits, etc. Um, Co-insurance is a shared burden after the deductible is met that you pay with the insurance company. And then the max out of pocket is the maximum amount that you would pay in a given plan year to use the health insurance while using the health insurance. So those are very important. Understand that. Follow this channel if this video helped you understand health insurance. Share this with others, with to people who need help understanding their health insurance. And this is um my connection. This is my work number. So text health to this number, and if you're interested in a free health coverage review. If you're interested in a free health coverage review. Today is not the day we're going to go over ACA, marketplace, etc., like all the dental vision. We're just focusing on the four key components. But, if you need more information, give me a text, give me a call to this number, and we could help you understand your coverage better, understand your benefits, understand your options, and see where it makes sense. But I'm here to help you solve your health insurance solutions, and we'll continue to do these videos uh at least every Sunday. But I might do a video here or there during the week. So again, if this video has helped you understand health insurance, the structure, please like, share, comment, ask questions, subscribe to the channel, and share this with others who this video could help understand the health insurance and their coverage. So I hope you enjoyed this video. Like, comment, subscribe, share this video with others, and have a blessed day.